What is a reverse mortgage, and is a reverse mortgage right for you? In this video, we're going to go over the ins and outs of reverse mortgages. My name's David Wright. I've been a loan officer in California and Florida for the last 20 years. I'm also active in the market on real estate, investing. I'm a landlord. I'm a homeowner. I buy and sell. So by the end of this video, you're going to have a really good idea of what the reverse mortgage is, if it's for you or if it's not for you. So what exactly is a reverse mortgage? Well, all those years that you've owned the home and built up equity and you have all this untapped equity in your house, a reverse mortgage allows you to tap into all that equity without having to move out of the house. Now, another part people ask all the time is, when do I repay all this money that I may possibly take out? You pay this money when you move out of the house or you pass away. Those are the main areas that cause you to have to either sell the house or refinance out of this loan. Now, with these reverse mortgages, there's basically three simple types. We'll go into more detail about them later. One of them is like a HELOC type of loan. That's an open-ended amount of equity you can tap into whenever you want, like a checkbook. The second one is a one large cash disbursement to you. And the third one is a monthly distribution. Each one's situation is different, what's best for you, and we'll go more into that later. So let's look at a couple things that you have to meet these requirements in order to get a reverse mortgage. These are really important. So number one, you must be at least 62 years of age to get a reverse mortgage. Number two, the home that you're looking to do this in must be your primary residence. Number three, the home must be paid off in full or have a substantial amount of equity already available inside the home. Another factor that goes into you getting the reverse mortgage is the appraised value of the home and your current age, because the older you are, the more money they're likely to give you. And then also finally, the going interest rates that are associated with these reverse mortgage type loans. So when you get your reverse mortgage, everyone wonders, what's the ways that I get paid? So let's look at a couple of them, because everyone's situation is going to be different to what's best for you of how you're going to use this money. So number one, they do a payout basically through a line of credit. They award you a line of credit. For example, let's say it's $500,000, and you can tap into that line of credit whenever you need money for your day-to-day living expenses. It's quite popular for a lot of people. Number two, there is a payout system that will be based off your age and the amount of equity in the home that you go through with your loan officer, where each month you're paid an allotted amount forever. So for example, let's say your monthly payout is $7,000, $8,000. You receive that money forever as long as you stay in the home. And the last one is just a lump sum payment. That's where they simply come to you and award you with, example, let's say $1 million in cash, and you do with that what you please according to your living situation. Each one of these has a plus and a minus depending on what you're going to do and how responsible you are with money. So please make sure you go over with your loan officer your situation so that you can design this to best fit you and your goals with this loan. So all this sounds really good about the reverse mortgage, but is there a downside? Yes, there is interest accumulation done on these loans. So the longer that you own this loan, the more interest accumulates. So the way that it works is like this. Each month, there's an accumulation of interest added on top of your loan balance for depending on what sort of payout that you took. And then, depending on how long the loan lasts, the higher and higher and higher the balance will get. So for example, you took a reverse mortgage at 62 and you lived to be 92, you got 30 years of accumulated interest on top of that loan. And then one more thing that you got to remember is, if you're leaving this property to somebody, they do have the option to take over the loan and refinance it out of the reverse mortgage, but they are responsible for all that accumulated interest. What are some of the pros of the reverse mortgage? Well, one of the biggest components that's considered one of the best is you actually get to stay in your home. You don't have to leave your home. Next, these loans allow you to have a lot more financial flexibility for you to pay for different sorts of living expenses and day-to-day costs that you may not have planned for when you're saving for your retirement. Another thing that you want to consider is, with these types of loans, there's other investments that you can reinvest these proceeds on and make more interest than what you're being accumulated on your home. And a final thing to think about when you're using these types of products, if you don't use a lot of the available credit, depending on which option you pick, that credit actually accumulates interest that you make as well. So there is a lot of upside to these as long as you budget your money properly and you take the time to look at everything you're going to have potential expenses for in the future, then it will work out very well for you. And the best benefit of the reverse mortgage is all the proceeds that you get are tax-free. They're not taxed because these funds are considered a loan. So it's one of the best ways to get a larger amount of income without paying taxes on it. So we've heard all about the upsides of reverse mortgages, but is there downsides? Yes, there is downsides. Let's touch on them because I really want to hammer this home to make sure you take the time to really go slow with the lender that you're working with to make sure all this is explained to you. So remember, like we talked about, there is an interest rate attached to this loan. It does accumulate debt onto the house year after year after year. And if you did have heirs that wanted to get the property, inherit it, and cash out this reverse mortgage, you maybe want to limit the amount of debt you're adding to the home. So keep that in mind. Also, you really want to sit down with a lender that's going to go over all the fees on this loan. This loan has numerous fees. Every government fee you can possibly think of, imagine, will be on this loan. So make sure the lender goes over all the costs and fees associated with it. Then you also want to make sure that the lender goes over with you the option that you're picking is the best long-term option for you, because once this loan is done, you cannot redo it and change your options. And if you chose the wrong one because the lender looked out more for his interest or her interest than yours, you will be in a bad situation. So make sure a lot of transparency goes on with all the fees on this loan, all the costs, and the type of payment term you're picking for you and your situation to help you better fit your goals. So I thought I'd circle back around just to go over again what can trigger you to possibly have to repay this loan, so that this is always on top of your mind when you're planning. Number one, if you move out of the house for more than 12 months, it can trigger instantly having to repay the loan. If the borrower has to go into a nursing home and leave this house, it can also trigger repayment. Or if you sell the home, it triggers repayment as well. And then something else that you really want to consider is, even though these loans have a lot of great benefits, you are still responsible for ongoing maintenance of the house. And by the maintenance of the house, we mean paying the insurance and paying the property taxes. Those are the two things you're going to be responsible for that you need to keep up to date at all times: insurance and the property taxes, because those are not included in the mortgage. Now that we've gone over some of the pros, some of the cons, the overall necessary information you need to know about a reverse mortgage, it makes you wonder, is a reverse mortgage for you? Or who is a reverse mortgage for? Here's some examples of what sorts of people can actually utilize a reverse mortgage. So if you went through your entire working life and you weren't able to properly save for a retirement, and you find as you're getting older, you still cannot continue to work, but yet you have a substantial amount of equity in your home and you're planning on other expenses coming up, a reverse mortgage may be for you. Other types of people who look into the reverse mortgage are people who potentially don't have plans to give this house to any heir and basically don't ever plan on moving, but would still like to have a better standard of living for the golden years of their life. Then this is a great way to supplement your income so you can enjoy more things. And finally, for those people who had unexpected events happen, were not able to just save, had something unavoidable happen that they did not foresee, the reverse mortgage can come in and fill a gap to enable you to still have a great life while living in your home, covering all your expenses, and not have the stress about potentially having to move one day or become a renter. On the flip side, people who should avoid a reverse mortgage are people who potentially are thinking they're going to have health issues, they're going to potentially go into a retirement home, they're going to potentially move, or they really want to pass this house down to one of their heirs. These are all the types of people that really should not be considering this type of loan, and you should be talking to a good lender, a good financial advisor to find out what other solutions can you have before you take this loan, because this loan will not fit in your wheelhouse to help you with your long-term goals. So if you fall into this second bucket, for people that really the reverse mortgage is not for you, there's other ways that you can solve the situation you're in, and here's some ideas that you may want to think about. Once again, call a lender, go over the finances on this, or talk to a financial advisor. You can sell your current home with all the equity in it and downsize to a smaller home and keep some of that money on the side. You can also potentially keep your current home and maybe pull a HELOC on the side just for emergency reasons. And finally, if there's something that you're really looking at going, how can I, possibly just get money now to put on the side? You could do a cash out refinance as well. These are all options you can think about so that you don't do a reverse mortgage. Like I said, if you're planning on giving this home away to an heir, it's really something to think about because there's sometimes better solutions than the easiest one to pick. And a lot of people try and pick the reverse mortgage because it seems so easy, but it's not always the best choice. Final thoughts on this with the reverse mortgage. If you have more questions and you want to go over more detailed analysis to see if it is for you or if it isn't for you and how it can best help you and your family, please reach out to me because the reverse mortgage is not for everyone, but it is for certain people in certain situations, and it does provide good solutions for those that fit in that box. If you don't fit in that box and you want to go over other options, reach out to me. I'm happy to help you out. If you enjoyed this video, please subscribe. I'm grateful for everyone that takes the time to watch my videos, and I'm always looking to become better. So if you have feedback, leave me a comment below as well. Also, if you'd like weekly updates about rates and the economy going on in local real estate, hit the link below. You can subscribe to that as well. Otherwise, thank you again for watching. Grateful for your time, and have a great rest of your day.